All right, let's just get straight into it because this is a big one. If you're trading crypto P2P in Nigeria, you are going to want to pay very, very close attention for the next few minutes.
What's going on, finance people? It's Josh here. Welcome back to JoshLM Finance. Now let's break this down. That quote right there, look, it's not meant to scare you. It's designed to prepare you. Because the reality is this, the days of guessing are over. The government isn't trying to ban crypto, they're not fighting it, they are getting ready to tax it properly. And well, the first step in doing that is knowing exactly who you are.
So, let's be super clear right from the start. The whole point of this explainer is to cut through all the noise. No panic, no fear-mongering. We're just going to do a clear, calm breakdown of what Nigeria's new crypto law actually means, especially for you P2P traders, and what you should probably start doing now if you don't want any, quiet problems showing up later on.
So let's start with the big question. Why now? Why is all of this happening? And the reason is actually really simple, and it's massive. See, Nigeria isn't just a crypto market. It's one of the largest on the planet. And that's not just an opinion, right? That's a fact backed by billions of dollars. And when that kind of money is moving around, mostly untracked, governments don't just notice. They build a system to see it. Just look at this number, $92 billion. That's the value of crypto that Nigerians moved between mid-2024 and mid-2025. 1 year. Let that sink in for a second. $92 billion. For years, all of that activity has basically been off the books, just happening in this legal gray area, especially in the P2P space. The government knew the money was there, but they couldn't really connect the crypto wallets to actual people, you know? Well, that whole era is officially coming to an end. With the new Nigerian Tax Administration Act, the NTAA, which goes fully active in 2026, crypto is being pulled into the formal system. And their key to doing it all? Its identity.
All right, so how are they actually going to pull this off? You know, the core idea is surprisingly simple. They're not trying to do the impossible, like track every single transaction on the blockchain itself. Nah. Instead, they're just focusing on the points where crypto touches the real world, where it touches the Nigerian naira.
And to do that, they are zooming in on something called a VASP. Now, this term is absolutely crucial to understand. A VASP, a virtual asset service provider, is pretty much any business that helps you get into or out of crypto. Think of it like the bridge between your bank account and your crypto wallet.
So who exactly is a VASP? Well, it's the platforms you're probably using every single day. We're talking about the big crypto exchanges, your Binance, your Bybit. We're talking about P2P platforms, and yeah, even independent crypto brokers. If a platform helps you buy and sell, it's a VASP under this new law. Simple as that.
And here is where it gets really interesting. These VASPs now have a whole new list of chores. They have to register with the tax authorities, they have to run strict KYC checks, and this is the big one, they have to report transaction data every single month. They've also got to keep your records for at least 7 years and report any large or suspicious activity. The game has totally changed.
So let's just put this as plainly as possible. The government isn't trying to decrypt your wallet. They're not watching the blockchain. They are just watching the doors, the on-ramps where you put Naira in and the off-ramps where you take Naira out. And honestly, it's a pretty smart, efficient way to do it. Okay, so let's get to the part you're really here for. What does all of this mean for you, the P2P trader? I know that's how most of you are operating, so let's have the real talk. I mean, think about how things used to be. You could trade some USDT, get your Naira, maybe you rotate a few bank accounts to kind of stay under the radar. It was a low visibility game. But now, if you're using Binance P2P, OKX, Bybit, pretty much any platform that touches Nigeria, your activity is being profiled, it's being logged, and it is being linked directly to your identity.
And this gets right to the heart of the new reality. Let's say you're consistently moving, 5 to 20 million Naira every month through these platforms. All that data is going to create a very simple, very logical question for the authorities, and that is, what is this income? Is it trading income? Is this a full-time business? Is it capital gains? And that question is exactly where taxation starts.
Now, I really need to stress this because it's easy to panic. This is not a ban. Let me say that again. Crypto is not being banned. P2P is not being banned. Your self-custody wallet is not suddenly illegal. This whole thing is about formalization and tax revenue. It's not about punishment. Nigeria is really just getting in line with global standards. They want legitimacy, not chaos.
But of course, with any new system comes new rules. And when you ignore the rules, there are consequences. So let's talk about the cost of just pretending this isn't happening for both the platforms and for individuals.
For the platforms, the VSASPs, the penalties are direct and they are severe. We're talking about fines up to 10 million naira, maybe even getting their license revoked. But for individuals, for you, the issues are often, well, they're quieter. They don't usually come as a dramatic arrest. They come later, maybe during an audit or an account review, or when your declared income just doesn't quite match your lifestyle. And those are the kinds of problems you really want to avoid.
Okay, so that's the lay of the land. Now for the most important part of this whole thing. What should you actually do? This is your practical, calm, grown-up action plan. No need to freak out, you just need to be smart.
So here are a few practical steps you should be thinking about right now. Number 1, get your tax identification number, your TIN. If you're a serious trader, this is not optional anymore. Number 2, separate your funds. Have a bank account for personal stuff and another for your trading. It'll save you so many headaches later. And 3, start tracking your activity. It doesn't have to be perfect, but it does need to be consistent. Look, this is all just about financial maturity and finally accepting that in this new system, volume always matters.
So here's the bottom line. If you zoom out and you look at the big picture, this isn't necessarily bad news. Not at all. Formal rules, they increase trust, they attract bigger investors, and they protect serious traders from, sudden policy shocks. Crypto isn't going away in Nigeria. It's just growing up.
And of course, the quick disclaimer, as always, this is just for educational purposes. It's not financial advice, it's not tax advice. If you are moving serious volume, please go talk to a qualified professional. It is the smartest thing you can do.
So look, 2026 isn't the year to be ignorant. It's the year to be intentional. Thanks for watching till the end. If this explainer helped you get a clearer picture, you know what to do. Like the video, maybe share it with a friend who is still doing anyhow. And of course, subscribe to JoshLM Finance for more breakdowns like this. I'll see you in the next one. Take care. Peace.